Hey guys, Scott here. Now, the two major parties have come out with gloves on announcing huge housing policies. This is going to change the landscape here in Australia forever. These are seismic shifts, massive policies that are going to put massive amounts of money, massive amounts of opportunity into people's hands, and it's going to put fuel to the fire in terms of property house prices. Let me break it all down and give you the pros and the cons, but also the opportunities for you depending on where you are on the property ladder right now, whether you're a first home buyer, an owner-occupier, or an investor. There's a lot to unpack, but let me give you the heavy hitters, the big policies. Let's start with a deep dive into labor. So the first one is the Help to Buy program. Now this is a 5% deposit with a government guarantee, and this is how it works. First home buyers can enter the market with just a 5% deposit. The government guarantees the remaining 15%. This means you don't need a 20% deposit to get into the market, you only need 5%. Now to be clear, banks do offer this to first home buyers today, but you've got to pay something called lender's mortgage insurance. Because you've only got a 5% deposit, you are a higher risk to the bank. So you've got to take out insurance in case you default on the loan. Now what has actually happened is the federal government is going to come along and play the part of the insurance company. So instead of having to pay $15,000 to $25,000 of lender's mortgage insurance when you do a 5% deposit, the federal government is coming along and saying, you don't need to pay that because we are going to insure you. In other words, the taxpayer is going to insure you. What this means that a lot of people only need $40,000, $50,000, $60,000 to get into their first home, and they will not have to come up with that additional $15,000, $20,000, $25,000 of lender's mortgage insurance. Remember, first home buyers also, in a lot of cases, qualify for a stamp duty exemption, so you also will not have to pay that. The big issue with this policy is that you've actually got to go to the bank. You must qualify for a 95% loan. You've got to be able to service a 95% loan. So this is not what it actually seems. When you listen to the announcement by Labor, you think, wow, I just come up with 5%, good as gold. No, you still got to go to the bank, and the bank must approve you for a loan. And we're going to see how banks are going to treat people that are being backed up by the government and do not have lender's mortgage insurance. So we're going to have to see the exact impact there. Big Labor policy number 2. This is $10 billion for 100,000 homes. This is a brand new promise. Labor has promised to invest $10 billion to build 100,000 new homes over 8 years, reserved exclusively for first home buyers. This is part of the government's larger National Housing Accord plan, which aims to build 1.2 million homes by 2029. The $100,000 home promise is Labor's direct federal contribution towards hitting that target. It works out to be about 12,500 new homes per year, and importantly, these homes are not additional to the 1.2 million target. They're included within that overall figure. This is about 240,000 homes, and this is really contributing to about 12,000 homes. Now, exactly how this money is going to flow through to build these homes, we are not clear on those details. So at this point, this is an election promise, not a guarantee. We don't know how it's going to work. We do not know where these homes are going to be, what they're going to cost, or who's going to have access to them. We know none of those details. Overall, it's a drop in the ocean, and we don't even know who is actually going to get these homes. Some might confuse this new $10 billion promise with the HAFF bill. Both are $10 billion commitments, but they are completely different. The HAFF, or the Housing Australia Future Fund, is a $10 billion investment fund created in 2023. The money is not spent up front. Instead, this is an investment pool, and it's going to be the returns of this fund that are invested into social and affordable housing. However, since 2023, this $10 billion fund has only resulted in 340 socially affordable homes, and they're not even new construction. These have been conversions of existing property, which means this fund has not contributed to solve the housing supply crisis. The other big policy from Labor that you must know about is the shared equity scheme, or the Help to Buy scheme. Now, this is where the government requires you to only put in a 2% deposit. There's going to be no LMI, there's going to be no stamp duty, it's just 2%, and the government will come along and they will own 30 to 40% of your home. Now, there are some limits on this, some income limits and price limits. I'll put those limits up here. And so this is not for everyone, and there's a limit to the amount of people that will be involved in this program. And it's still very unclear how to get on this program, who's going to be involved, how do you qualify, but there is going to be a queue of people queuing up to use this. This is not a solution This is not a general solution which is going to be applicable to all Aussies, but it will help low-income earners get into their first home. However, what you have to realize is that the taxpayer is going to be funding 30 to 40% of the purchase. This means that tax cuts under a Labor government are not likely to happen because of these commitments. We're using government money to help people. We're not actually using their own money to help themselves. Let's now take a look at the big hitting policies from the Liberal Party. Policy number one, this is huge. Mortgage interest tax deductions, and it applies to new builds only. So this is a policy squarely focused to get new supply onto the market. So I do like it from that standpoint. The reason why property is so unaffordable, the reason why we have a cost of living crisis, because remember, 30, 40, 50, 60% of your income is going towards your housing. The big reason we've got a crisis there is lack of supply. So more policies that deliver more supply is what we want to see. So what the Liberals have put forward is this: the interest repayments on your home when you buy it and you're a first home buyer, and importantly, you're constructing a brand new home to live in, the interest repayments on your mortgage are going to be tax deduction, but this can result in $8,000 to $11,000 per year in cash back into your pocket. It's only valid for 5 years. If you look at it, that's around $50,000, $60,000 over that time period that's going to help you to own your own home. Now, this will help you year to year, but it doesn't help you to have the funds to get into your own property. Now, this leads me to the next big policy by the Liberal Party. They're saying you can get a loan from your superannuation of up to $50,000 and use that $50,000 towards purchasing your brand new home. So when you add that policy to the mortgage reduction strategy or the mortgage reduction policy, $11,000 a year, $50,000 from your super, what it means is you potentially can put together $40,000, $50,000, $60,000. You can get into your first home, and you've got about $100 to $200 per week from the government in your tax return to help you to afford to repay that home. Peter Dutton's headline policy is all about helping repayments, not deposits. Under the First Home Buyers Mortgage Deduction Scheme, eligible buyers can deduct mortgage interest from their taxable income. If you're a first home buyer building a brand new home, you can deduct mortgage interest up to $650,000 of your loan from your taxable income. The policy runs for 5 years. Income caps, $175,000 for single, $250,000 for couples. You must live in the home. This is not for investors. Potential savings up to $11,000 per year or $55,000 over 5 years, which is equivalent to over $200 a week. This policy is designed to stimulate new home construction and not create more demand for the limited existing stock that we've got, and therefore not push up those property prices more than what they have to move. Now, with the super, the key detail, you must repay the amount back into your super when you sell the property. This is a short-term solution to the deposit hurdle, but it does preserve your long-term retirement balance because repayment is mandatory. This is not a burden on the taxpayer, so it means that it opens the door to tax deductions into the future. And if you watch any of my content, I truly believe that if we had more choice and lower taxes, working people can make better decisions, have more money in their pocket. And when we leave it up to government, what actually happens is we create all of these problems like the housing supply crisis that we have today. So here's the truth, guys. Labor is building a long-term housing machine, but progress so far has been slow. The coalition is offering fast relief, but in a market where there are more buyers and not enough homes, this will always push prices higher. Both parties are spending big, but neither one has yet delivered a real solution to our housing supply crisis. Let me know in the comments which plan do you think helps more, and if you want some advice or help getting into the market, please contact my team. This is a political video. YouTube will not push it out, so please help me by liking, leaving a comment, subscribing to the channel, and sharing this with anyone that does need this information. I really appreciate your guys' help, and thank you for your support. Take care.